Talking about things that are in flux and not static, market capitalizations are thus. Today, it looks like if Nvidia holds at these levels, it will be more than Apple in terms of worth, $3.36 trillion as Apple slips on the day. What do you make of Nvidia being added to the Dow? What do you make of it, when crucially also, who comes out of it? And of course, that being Intel.
Well, sadly, Caroline, I remember when Intel was added to the Dow in 1999. And talk about bad timing, which, by the way, this committee that makes the selections often does not necessarily time these things very well. Intel is down cumulatively since end of 1999, 3.5%. So this is a company that has not pivoted to new technologies, has squandered innovation. And so we've been out of the stock for quite some time. Think of Xerox, who developed the mouse but didn't commercialize it. Who commercialized it? Apple and Microsoft. So I think Nvidia has stepped in the wings, or has stepped in onto the stage, and Intel is fading to the wings. That doesn't mean the company will go out of business, but I mean, we've seen recently it's in fact a takeover target. So I think you want to be long Nvidia here. The earnings growth is remarkable, and again, on a price earnings to growth basis, which is really how you have to look at this stock, it's trading at 1.1 times versus, as I mentioned, Tesla over 40 and Microsoft at 2.2 times. So I think it was a good ad. I don't know about the timing. We'll see. But I do think we're early in the runway and of generative AI and computing. I'll just say one last thing. I loved the story Larry Ellison told about him and Elon Musk going to dinner with Jensen and just saying, please take our money. Please take more of it. Please give us more GPUs. So I think the backlog in Blackwell is pretty significant, and Nvidia is poised to do very well in the coming years.
I'll use TypeRank's stock comparison tool in this study to look closely at the top AI investing options. Despite this, Nvidia has produced an outstanding 5-year return of 2,524%, while Google and Microsoft have produced returns of less than 200%. Over the last 12 months, Nvidia has seen a net income margin of 55%, up from a 5-year average of 31.4%, and approximately 200% year-over-year revenue increase. Although 2025 is anticipated to be a prosperous year, the corporation is nearing a possible turning point since the new Blackwell GPU has already sold out. The cyclical nature of semiconductor investments will be evident to those who are familiar with them. I'll use TypeRank's stock comparison tool in this study to look closely at 3 top AI investing options. As a result, I have greater faith in these well-established big tech behemoths than in Nvidia, a relatively recent semiconductor company with an AI concentration. Although its risk profile worries me, I think Nvidia's stock still has potential for growth over the coming years. The stock may be impacted by market volatility in 2026, but 2027 and 2028 in particular are probably going to be more difficult. With a cautious October 2025 price goal of $155 and a bull case aim of $175, I now have a hold rating. Wall Street is still very optimistic about Nvidia, with an average price target of $153.86, or a 13.6% increase. With 39 buy ratings, 3 holds, and 0 sells, the consensus rating is a strong buy. This bolsters the argument for staying on to Nvidia until it's evident whether a medium-term decline is imminent. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
What the reaction is really keying off of is just the very high amount of spending that's going into AI and the very uncertain payoffs and far out potential payoffs that would be coming from the mega cap tech companies that have such a large weighting in the index, we have to remember. But we do think the spending is going to continue. We do think there will be payoffs, even if they are very far down the line. But when we hear some of the discussion and commentary around the payoffs, it does sound rather vague and rather distant. So we think the market's keying off of that in the face of strong run-ups, high valuations, and a lot of uncertainty. So that's the environment that we face today, and it makes sense that the market isn't going to get enthusiastic about that.
So where does that place your earnings growth expectations for not just this quarter, but even as you're hearing and getting more of a sense about where this spending is either going to continue to be aggressive versus where it will finally be accretive to these businesses, and how that factors into your kind of longer run projections?
Well, we do think 2025 is going to be a healthy year for earnings growth. We actually think that what's going to drive earnings growth in 2025 is business spending broadly. And part of that is certainly AI and what goes into it, data centers, upgrades to the electricity grid, other infrastructure that will drive spending, technology spending. We think businesses are really going to open up their purse strings more as interest rates come down, and as the need for investment and efficiency gains start to become more and more important. Now, what are some of the headwinds? Some of the headwinds, as you mentioned, is that the payoff for some of the spending might not come for some time still. We think that's probably a very late 2025 story, 2026 story. And whether or not there are going to be bumps along the way or some choppiness or waves of enthusiasm for AI is probably something to be expected here as we go throughout the.
Many investors, particularly novices, frequently purchase stock in businesses with a compelling narrative, even if such businesses are losing money. Regretfully, there is little chance that these high-risk investments will ever pay off, and many investors suffer as a result of their mistakes. Even though a well-funded business may experience years of losses, it must eventually turn a profit, or else investors will leave and the business would eventually die. A corporation's share price typically reflects strong earnings per share, EPS performance, since strong EPS results are a sign of a company making good profits, which investors view favorably. So, rising EPS is a positive indicator for many aspiring investors. The fact that Nvidia increased their EPS from $0 and 41 cents to $2 and 16 cents in a single year is an amazing accomplishment. Earnings growth that rapid typically portends positive things for the business. This can indicate that the company is at a turning point. When paired with a high profits before interest and taxation, EBIT margin, top-line growth is a wonderful indicator of sustainable growth and a terrific way for a business to stay ahead of the competition. The fact that revenue is increasing and EBIT margins have increased from 33% to 62% gives Nvidia stockholders reason to be optimistic. These are both excellent indicators of possible growth. The challenge for investors is to identify businesses that will do well moving forward, not only in the past. Although there are no crystal balls, you can view our 100% free visualization of consensus analyst projections for Nvidia's future EPS. Given Nvidia's $3.3 trillion market valuation, insiders shouldn't be expected to own a significant portion of the company's shares. However, we do find solace in the fact that they own stock in the business. In fact, they have a considerable sum of money invested in it, which is currently worth $130 billion. Because it demonstrates their dedication to the company's future, investors will value management having this much stake in the outcome. Growth rates have been extremely strong, and Nvidia's earnings per share have been skyrocketing. The significant insider ownership only heightens our curiosity, and the EPS rise is undoubtedly attention-grabbing. Naturally, the substantial rise is expected to signal a fundamental improvement in business economics. All things considered, we firmly believe that it is worthwhile to keep a close eye on Nvidia. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
The inclusion of Nvidia in the Dow, it's going to happen later this week or be official later this week. Just the significance of that, how you're looking at that from a strategy portfolio management standpoint.
Well, I think of a lot of investors are probably saying, finally, this is happening. Nvidia has been front and center for so long, and the Dow is somewhat slow moving to make changes. and that's part of their approach. I think more people are going to find in their portfolios when they're tracking the Dow, or if they have ETFs that follow the Dow. We're not seeing this as something that we expect to be a big shift in terms of where funds are allocated by individual investors. But we do think it does certainly raise a profile of Nvidia even further. And it is something that's noteworthy in today's market, just the weighting of the mega cap tech companies. When we look at the earnings or we look at what's driving the markets, a very small subset of companies is really having an outsized weight here.
And so with that outsized weighting, how would you be positioning further towards the thesis that's already kind of proven itself from an investment standpoint, and now it's going to be more of the companies growing into some of the valuations that the street has given them?
Yeah, I think there is going to be somewhat of a growth into the valuations for several of these companies. What I think we want to look at is who are the companies that are really going to be the next level down that are benefiting from the spending which is taking place. Certainly, these mega cap tech companies are very deep pocketed, and they seem very committed to not just continuing, but even accelerating this AI spending. So that's going to create just a continuing ecosystem of who's going to benefit. And it's not just tech companies. It's also the nuts and bolts of the economy, the infrastructure plays, the brick and mortar, roads, bridges, data centers, electricity, grid enhancements. All of these areas are going to benefit from this spending indirectly. So those are areas that we also want to focus on.
So we have earnings. We also have the Fed meeting. We have the election. What is the biggest test in your view for the markets this week?
Well, probably I would say the election. The Fed is more or less on autopilot, we think, with a 25 basis point cut coming up. In terms of the election, it's anything goes right now. You see what's happening in polling. You see what's happening in prediction markets. There are a lot of scenarios in play, and when we get results is also another large question mark. So I think there's a lot of uncertainty just looming over the markets, and how people perhaps been positioned and how hot money could shift around after the election could cause some volatility.
Young Ma of BMO, thank you so much for taking the time here with us just after the market opened today.
Thank you.
Intel is no longer a sustainable part of the Dow Jones Industrial Average at about $23 per share. The S&P Dow Jones Committee, which determines when adjustments to the 30-member index, which has long been considered a crucial indicator of the state of the American economy, came to that judgment. Intel is out, according to S&P after Friday's market closure. On November 8, it will be supplanted by rival chipmaker Nvidia, which as of Monday is just a hair behind Apple as the second most valuable public corporation in the world. With the move, internet behemoths Alphabet and Meta will remain outside the Dow, but 4 of the $6 trillion tech companies will be included. However, there is a clear one-for-one swap opportunity because Nvidia recently overtook Intel as the largest chipmaker by revenue. The Dow's status as a price-weighted index is one of its distinguishing features. This implies that a stock's value is determined by its price rather than the company's market capitalization. As a result of losing market share for its core PC and data center processors and being outperformed by Nvidia in artificial intelligence, Intel's stock price has fallen more than half this year, closing Friday at $23.20. With a weight of less than 0.5%, Intel is currently by far the least important Dow member. Although its market weight will be about 58%, Silverblatt stated that the technology industry's position in the Dow will increase from 18.9% to roughly 19.5%. Sherwin-Williams' simultaneous entry into the index and replacement of Dow Incorporated results in a larger weighting shift, moving the materials sector from less than 1% to roughly 5%, according to Silverblatt. We may have to wait a long time for Alphabet and Meta. In January, Amazon became a member of the Dow, increasing the index's representation of the internet industry. The public trading of Alphabet's Class A and Class C stocks adds a little complexity to the company's position. With a price of about $562, Meta presently holds the largest weighting in the Dow, trailing only United Health. There aren't any clear plans for the future that would involve Silicon Valley's megacaps, considering the increased total representation of tech. You have to take one out before you can put one in, Silverblatt remarked. Making it to the Dow 31 will be challenging. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community. Don't miss out on crucial updates that could impact your investment decisions.